Thanks for joining us. Today's the news with Gold, Silver, Bitcoin for June 29th, 2020. The first bit of news we're going to look at here is how the IMF has lowered global growth forecasts. The International Monetary Fund lowered its global growth forecast for this year and next in the wake of the Great Lockdown. The IMF forecasts a decline of 5% in 2020. The UK economy is expected to contract by over 10% in 2020. Italy, France, and Spain are expected to decline even more. Previous April forecasts were a 6.5% decline for the UK and 3% for the entire world. Stay-at-home orders and social distancing, however, have sapped consumer spending. The IMF now predicts that people will do more precautionary saving, thus reducing their consumption. The report anticipates more economic damage, with firms going out of business and people being unemployed for extended periods of time, suggesting it may be harder for economic activity to rebound. For those businesses that do survive, their efficiency will decline due to the steps they will be required to take to improve safety and hygiene. The IMF believes the biggest contractions will take place in Europe. The IMF has downgraded the forecast for all 16 individual economies for which it gives projections. The IMF changed India's forecast the most, predicting a 4.5% contraction. The IMF does, however, anticipate a 1% increase for China. Quote, "This is the worst recession since the Great Depression," Geeta Gopinath, the IMF's chief economist, told reporters. Quote, "No country has been spared." We are looking at potentially the worst depression since World War II, arisen from the Great Lockdown, or that is the stay-at-home and social distancing orders. The Great Lockdown will lead to the worst depression since World War II. Not since 1870 have so many economies simultaneously experienced declines in per capita output. Emerging market and developing economies, EMDE for short, are expected to contract the most in 2020 for the first time in no fewer than 60 years. According to the World Bank, the global economy has experienced 14 global recessions since 1870. That is in the years 1876, 1885, 1893, 1908, 1914, 1917 to 21, 1930 to 32, 1938, 1945 and 46 at the end of World War II, 1975, 1982, 1991, 2009, and 2020. The COVID-19 recession will be the deepest since 1945 to 1946 as World War II came to a close, and at least more than twice as worse as the 2007 and 2009 global financial crisis. Many services have suddenly stopped, and global trade and oil consumption drops by record amounts this year so far, as the global rate of unemployment climbs to its highest levels since 1965. In 1980 to 82, oil consumption declined 9% from its peak in 1979. Oil inventories, on the other hand, have surged, leading to the steepest one-month decline in oil prices on record. 5 out of 6 emerging market and developing economies are projected to fall into, quote, outright recession, enduring their lowest growth in at least 60 years. All of these countries will see decreases in regional per capita output for the first time during a global recession since 1960. So the second Great Depression started in 2020. As economies begin to close again, with politicians citing increases in COVID-19 cases, retail sales have been on the increase. For instance, retail sales rose 18% in May, and 2.5 million jobs were added. Yet the experts are warning that a depression might still come to pass if massive stimulus is not unloaded. The Congressional Budget Office believes the American economy will create $8 trillion less in economic activity over the coming decade than it projected just a few months ago. A full recovery, they say, might not happen until the 2030s, and quite frankly, some believe it may never happen. Today we are looking at a household fiscal cliff. A recent report from the Federal Reserve said debt held by households increased nearly 4% in the first quarter, after which an increase had taken place before the onset of the pandemic. Greg McBride from Bankrate.com says approximately 1 in 6 households report having more debt now than before the crisis, and that's 1 in 4 for those that have suffered some sort of income disruption, he said. The New York Fed says the average debt per capita rose to $52,000 in the first quarter, a 3% increase by the year before. Stimulus packages in response to the so-called Great Lockdown have staved off some of the cascading economic effects, according to economist Tim Quinlan of Wells Fargo. Quote, April, for example, was the best month on record for personal income. That was the month that the stimulus checks got counted, Quinlan said. According to Quinlan, savings rates have also increased, given the restrictions on in-store shopping, and some consumer credit has slowed, Warren Cornfield of Moody's said. Quote, it's down very, very significantly with auto, because auto sales are down, Cornfield said. He worries borrowing will start to rise as the government stimulus wears off. Businesses, too, are going under. A new study projects more than 100,000 small businesses in the United States have shuttered for good due to the Great Lockdown. Quote, overall, our results suggest that the pandemic has already caused massive dislocation among small businesses. State and local budget shortfalls, furthermore, are creating economic problems across the country. Washington State, for example, faces an $8.8 billion budget shortfall. Oregon is facing a $1 billion budget shortfall. The Georgia Senate, meanwhile, has advanced a state budget proposal to reduce spending by 11%. Kansas, too, is facing a budget shortfall of between $600 and $700 million. Already halfway through 2020, Louisiana endures a $370 million budget shortfall, and Ohio is facing a $2.4 billion budget shortfall. California lawmakers have agreed to close, furthermore, a $54.3 billion budget gap, as Nevada is facing an $812 million shortfall for fiscal year 2020. Numerous states, meanwhile, namely Arizona, California, Texas, and others, have enacted more lockdowns. The initial stay-at-home orders created mass job loss, with nearly 40% of low-wage workers losing their jobs since March. Meanwhile, the CBO forecasts that American consumers will purchase, every quarter through the end of 2021, between $300 billion and $370 billion less than they would have if the pandemic had never happened. Economists predict that 42% of people who lost their jobs will not return to their former employers. Sales tax, real estate transfer taxes, income taxes, fines, and fees are all in freefall. Overall budget at the local government level is expected to total $1 trillion next year. Michigan, which is looking down the barrel of a $3 billion budget gap in 2020 and $4 billion in 2021, have asked 2 in 3 state employees to accept a partial furlough. The New Jersey government has asked 100,000 public workers to move to abbreviated schedules. Schools have laid off about 500,000 people. Meanwhile, in the background, experts at the IMF are saying that the time of the special drawing right is upon us. 75 years after the creation of the Bretton Woods Conference, the IMF is saying that now is the hour of the special drawing rights, which was introduced by the IMF Articles of Agreement. In an article on the IMF blog, Jose Antonio Ocampo highlighted the rise of crypto assets and the launch of Facebook's Libra, a digital currency based on blockchain, while calling for a more central role of the special drawing right in world affairs. He suggests that perhaps the SDR could be reissued on a blockchain or distributed ledger. As central banks worldwide discuss digital national currencies, IMF Managing Director Christine Lagarde has discussed launching a new digital version of the SDR. The SDR was created 50 years ago as a way of supplementing IMF member countries' official reserves. Quote, the only true global money, writes Ocampo. It is backed by all IMF members. According to the IMF Article of Agreement, the SDR was viewed as, quote, the principal reserve asset in the international monetary system, not the dollar. But the SDR has since virtually gone unused. Quote, a more active use of this tool would significantly strengthen the IMF's role as the center of the global financial safety net, wrote Ocampo. The idea of a global currency dates back to John Maynard Keynes and his Bancor idea, which was a unit of account in his proposed International Clearing Union. There have been, since 1970, 203.1 billion SDRs issued. The SDR has only represented but a small fraction of global reserves, and only central banks and a few international organizations can hold SDRs, which are used by the central banks of developing countries to pay other IMF members. It is also the IMF's unit of account. A basic advantage of the SDR is that it can be deployed during global financial crises as an instrument of international monetary policy, as was done in 2009, writes Ocampo. Quote, but SDRs could also be issued more systematically in a counter-cyclical way. Ocampo suggests, based on the estimates of economists, the IMF could issue somewhere between 200 and 300 billion in SDRs annually. Ocampo suggests treating the SDRs that countries hold as, quote, deposits in the IMF, which the institution could then lend to countries in need. He says SDRs offer three advantages, quote, first, it would spread across all countries the signage generated by issuing a global currency. Second, it would reduce the demand from emerging markets and developing economies for foreign exchange reserves as self-insurance. Third, it would make the international monetary system more independent of U.S. monetary policy. Thanks for joining us today with the news with gold, silver, Bitcoin. We've gone over several stories here. We started with how the IMF has lowered the global growth forecast as the effects of the Great Lockdown increasingly come into view. We've gone over how this Great Lockdown precedes worst depression since World War II, and how the second Great Depression started in 2020. And finally, we closed it today with how the IMF is proposing a solution to all this chaos. And that solution is the special drawing right, the real reserve currency of the world. So thanks everyone for tuning in, and have a great day.